This is the How to Trade Stocks and Options podcast brought to you by 10MinuteStockTrader.com, where we give you the tools, tips, and tricks to help you trade faster and trade smarter. And here's your host, voted one of the top 100 people in finance by Redwood Media Group, founder and head trader of 10MinuteStockTrader.com, Christopher Uhl. Today's podcast is produced in partnership with my friends at TrendSpider. I use TrendSpider on a daily basis, and honestly, I could not imagine trading without it ever again. Their platform has charts, automatic technical analysis, backtesting right there on the screen, and alerts that are sent straight to my phone, all of which I use every single day. Now you can get 2 weeks to try TrendSpider for yourself for free and get discounts of at least 15% off when you sign up for their service. Listen, they are so confident that this will change the way you trade, they'll even give you a one-on-one demo with the platform and answer any questions you may have about how to incorporate their platform into your trading. And that's exactly what I've done. So head on over to trendspider.10MinuteStockTrader.com to get your discount code. And I'll even throw in some extra bonuses worth over $100 to incentivize you to take their free trial of TrendSpider today. Now listen, the only place to get your discounts and the free bonuses is at trendspider.10MinuteStockTrader.com. One more time, that's trendspider.10MinuteStockTrader.com.
I'm Dan Ushman. I'm the founder of TrendSpider, and I'm your host today. And today I've got a wonderful guest, one of our good friends in the industry, a longtime position trader, Bob Desmond, with the Contrarian Trader. And Bob's going to take some time to tell us about some of his favorite trades today that he's done. If anybody has any chart requests or questions for myself or Bob, feel free to throw them in the room. We'll get to them at the end. Before I really get going, I just want to make sure, can everybody hear me okay? Can someone just pop something in the channel? Awesome. It's good to hear that. So again, welcome. Thank you so much for being here. Let's get on the road. So first thing I got to throw up here, the lawyers make us do it, but we've got to throw up this disclaimer. We're going to talk about some charts today. We're going to talk about some trades. We're going to pull up some analysis, Nothing we say here is like a suggestion. You should go blindly buy whatever we're talking about. Do your own homework. If you like it, trade it. But, do your own homework and make your own decision on it. Just because something works great for me or for Bob doesn't mean it's going to work great for you. So before we get into the meat of this, for those of you who are new with us, who aren't familiar with TrendSpider, I'm going to give you a quick 2-minute overview of it. TrendSpider is software. So we're a software company. We build tools for traders. And what's really unique and special about this particular team here is almost everybody on the team is a trader themselves. So I trade every day. I'm a swing trader. I focus on biotechs. My partner, Jake, is a options trader, and he likes to play some of the larger cap tech companies and anything that's very liquid. But everybody in our team trades, and we built this software first and foremost for ourselves. We wanted to build better tools to use ourselves in our own trading. And we quickly realized that in order for this to be a really good platform, we need a lot of users because trading is very specific to the person, and everybody's style and the tools and indicators and techniques and strategies are different. So, we've been built from the ground up. We're about 4 years into this, and what we've built so far is pretty cool and get a lot cooler. So, TrendSpider is one platform, right? But it's many different tools. And there's a lot of advantages to that. Two of them that I like to tell people about, it's just one tool to learn. You don't have to learn how to use one backtester program, and then one alerting tool or one charting platform. It's only one tool. It does everything that you need and quite a bit more. And that means one thing to learn and one thing to pay for. So some of the cool things that we do, and these are some of the things that make TrendSpider unique that you can't really get anywhere, are some of our core features. One of them is smart charts. Now, these are charts with built-in algorithms that you can use to analyze themselves your way. The one we have shown up here is trend line detection, but there's also automatic fibs, automatic support and resistance, pattern recognition, and a whole bunch of other stuff. We also do multi-time frame analysis. That lets you take one time frame, call it the daily chart, and plot the indicators, trend lines, and fib levels from another time frame on that chart. So long-term trends can be printed on short-term charts, and short-term price action tends to respect long-term trends. We're also the developer behind raindrop charts. This is something I'll touch on later if I get a chance, but these are a new type of volume adjusted price chart. They're really good for finding points of indecision and identifying bear traps, bull traps, fake breakouts, things like that, as well as distinguishing those from real breakouts. They're really cool and they're very unique. You can only find them in TrendSpider. We're also a scanner, and this is brand new, and a lot of people have wanted me to talk about this, so I'm going to take a moment here and show it to you in a second here. We also have built-in back testing. We have a powerful alerting platform, so you can basically outsource chart monitoring to the cloud and more. Really briefly, a lot of people want to know about the scanner, so I'm just going to show you how this works. I'm not going to spend a lot of time on this because this can be a whole hour on its own. But basically, the idea here is you can search for a needle in a haystack, right? So we'll define what our haystack is. Let's call it the Russell 1000. And let's say we want to find any chart that on the weekly time frame in the Russell is currently printing a hammer on it, right? So we can select that. We can tell it to look at the current candle, and we can literally search the Russell 1000 for any chart that on the weekly time frame is printing a hammer at the moment. And hammers on long time frames are fairly rare. So, there's one right there. But they're not something that you find very often. So you can also search on the Russell 2000 or any watch list you come up with. It's pretty easy to be able to go out there and search the market for any charts that fit any particular pattern you can dream of. And that includes things like being oversold. That includes all different types of chart patterns. Oops, I'm on the daily chart here. I should go on the weekly chart. All different types of chart patterns that you might be interested in. So it's a cool tool. It's awesome for discovery if you're trying to find stocks to trade. And it comes with 30 pre-built scans here that look for all kinds of fancy stuff like breakouts from consolidation, oversold conditions at divergent lows, and so forth. So, I'm going to stop there because I don't want to take up all this time here. And let's talk about charts with Bob. So, Bob, before we get into it, maybe you can just take a moment and tell everybody a little bit about yourself, about your service, what you do, how you trade. And if you want, you can take over the screen share at this point, too.
Sure, absolutely. Hello, everybody, and thank you for spending your Sunday night with us. And a bit about me. I became interested in the stock market in 1987 during the stock market crash. I was watching the news. I saw all the hullabaloo. I said, "Wow, this is dramatic stuff." And I bought my first shares of stock. It was, I'll never forget it, LOJM, LoJack, and I bought 75 shares of that and was hooked. We started the Contrarian Trader in 2005. That was after the dot-com crash. You saw many of the faces that you had seen during the 1990s on CNBC every single morning, whether it be Bernie Ebbers or whomever from these companies that went under. They were doing perp walks and they were going to jail. And you knew that the entire system was rigged. And I wasn't entirely hooked at that time during the dot-com period on charting. I referenced charts, but I wasn't as deeply as involved as I am now. And I knew that you needed a better way to do business if you were going to be successful in trading. So we got deeply involved with learning the charts and also learning the options market. I believe in having a concentrated position in your speculative account and swing trading around that position as well. But also with all those positions, whenever possible, offsetting some of the risk by generating cash flow by selling either covered calls, or if I want to get in on a stock I'm bullish on, however, I don't want to pay up too much, I want to get a quote unquote Groupon on the stock, I'll sell puts. And that's, for those not familiar with options, they hear puts, they think bearish. It's actually a bullish play because I'm acting as the banker, not the borrower. I'm not buying the options. I'm selling them and generating cash flow. So we like to, again, just a synopsis, I like to have a concentrated position right now. We are heavily invested in the gold miners. And I have multiple reasons for that trade being on. We've been in that position for quite some time. and we did very, very well in 2019. 2020, a little bit rough so far, but we did have a breakout in gold last month, and we're seeing a retest of support at current. So seasonality is not favorable for this month. I predict that next month will probably do a lot better, but we are generating premiums each week off of that position, offsetting against some of that risk. So last time I was on, Dan, the markets had been, I want to bring up a chart of the spiders if I could, and just to talk briefly about, how we look at the markets. And I was on in October.
Yeah, I think it was late October.
Yeah, the markets had been under pressure for 3 consecutive weeks prior to, and the sentiment at that time was that it was pretty bearish. And I said, you know what, I'm predicting that we're going to get a breakout. That the charts haven't broken down yet, and the macro reason was that it's an election year coming up, and they were not going to allow these markets to drop. And sure enough, we have rallied since that point in time, roughly about 12%, give or take a bit. But I
remember that. It was stressful.
What's that?
I remember that time.
Yeah.
It's a stressful time.
So while I think that going into elections, the election day, we probably will see a market that is higher. I think in the short term that I'm short-term bearish on the market, and we're currently shorting the triple Qs, and we remain long with the gold miners. And I want to go over a couple of reasons why that we are a bit bearish on the market in the short term. And just to talk about the contrarian trader for a moment, what we do is I do send out trade alerts on the positions that I do open up. I do offer, I like to engage members, and that's live. And in fact, Dan, I like to share a link with the folks who are good enough to spend time tonight with us. I'm going to have a members only live stream that starts at 7 p.m. Eastern Standard Time this evening. And I'll share that link with the folks that are good enough to join us here tonight. So if they want to join in, they're invited. All they need is a link. They don't need to pay for anything. It's on YouTube. And I'd love to have them there. If they want me to go over some chart requests there, that's great. I know we're going to do some of that as well here. But I'll drop a link into the chat box in a moment.
So I'm curious, Bob, just to set set the kind of playing field here. When you say short term, you're kind of bearish in the market. How do you define short term? Is that 3 months, 6 months through election day?
Yeah, I think that short term could be, in this situation, I'm thinking about for the next 2 months, we're going to have some stress in the marketplace because we've come so far so fast. And I don't believe that this is going to be the big short, the second big short yet. I think that's going to occur after election, after the election occurs. Whoever gets into the office, whether it's the re-election of President Trump or an opponent, whoever that might be. But short term, I would say about for the next 6 to 8 weeks that I'm going to be bearish on the market. Unless, of course, we simply trade sideways. We alleviate this overbought condition that we're seeing. We're quite a bit extended on some of the really mega cap names. And I think that we're setting up for a nice pullback. Again, I don't think it's ultimately the crash that we're looking for. I think that the markets at current are completely understating the impact of the coronavirus. Copper prices are rapidly decaying. They're at multi-year lows right now, and they just opened up. I just checked the futures a moment ago. They opened up lower. You have the Baltic Dry Sea Index, which is just completely in free fall. And you have the Federal Reserve. I mean, if you take a look at the performance of the market relative to the Federal Reserve's action of late, they're correlated. Were it not for the Federal Reserve, hopefully everybody can see this chart that I just brought up. were it not for the Federal Reserve and their efforts, this market would be in some serious trouble right now because they're providing so much liquidity. And the question I would have for Jay Powell, who doesn't want to admit that we have a QE4 going on, is if the economy is so great, why are you printing so much money? So we saw the month of January, which was down, and people have a tendency to forget quickly, and that's just human nature. But oddly enough, most of January, you saw money come out of the Federal Reserve's balance sheet, and the markets closed down on the month. So there's a real serious correlation between what the Federal Reserve is doing and what we're seeing in the marketplace. So longer term, I think we're setting up for a major short. At current, I'm just simply looking for a pullback, and again, probably 6 to 8 week pullback in the markets. And what I'm looking at right now, but before I even go to that, I wanted to talk about this trade I just did, Tesla. And it's symbolic of the market that we're in at current. And
that was a crazy mover. Takes some cojones to trade Tesla these last few days.
Yeah, I mean, I saw it breaking out, and it was so reminiscent of the .com bubble. It had my hair standing up on my arms, and I just had to track it. And here's the weekly chart. I'm still bearish on it. I wouldn't go shorting it again just yet. I'm waiting for a setup. But here's the daily chart. And I was talking about it here. I did some commentary with members the evening prior. I believe this is the 3rd. Yeah, the 3rd. And I said, if they gap this stock up higher tomorrow, I'm going to be leaning into the short side. And we bought 2 rounds of put options, the 900 strike price. And we booked, our basis cost was $79.15 per contract. And we booked a profit of $36.85 or 46.5% profit on that trade within 12 hours. So this is a stock that I'm a huge Elon Musk fan, but this is a stock that was owned by the street and a lot of hot money chasing this. And the story took over. And unfortunately, a lot of people got burned these past several days. And
a lot of shorts got squeezed out too.
Yeah, no doubt about it. And if you take a look at the weekly chart here, we still on a weekly basis closed right at the 3rd standard deviation Bollinger Band. For those folks not familiar with that Bollinger Band, I'll save the statistical reasons of why we're not supposed to be here, but I'll just say we're not supposed to be here relative to the 20-period moving average over the course of the past whatever the period they're measuring on. So I think that if we do see a surge higher yet again on Tesla, I'm betting that we'll probably get it. If we get an up market, you'll see money move into Tesla again, because people believe that this is a buy the dip event. And unfortunately, I think there's going to be another round of selling on Tesla, and we may be involved with it as well to the short side. But I'm not predicting a crash here. I'm just predicting a pullback. I'm again a huge fan of Tesla.
I'm a big fan as well, but their valuations just inflated.
Yeah, and it's simply madness right now. And the trade that we're looking to put on, or that we are putting on this coming week, we're going to look to lean into a little bit heavier. If I'm right, if I'm wrong, then we're going to have to stop out. But we are shorting the trip queues, and you can see here. I just want to start off with a monthly view, how extended we are. And we're not at the 3rd standard deviation Bollinger Band. Obviously, I've mentioned it several times here. I use the Bollingers quite heavily. I don't use the 2 standard. I use the 3 standard. It's a higher level of event, I'll call it. And we are very close to leaning into that Bollinger Band. So in short, yet again, we're not supposed to be here. Does that mean that the ETF is going to crash? No. It could easily trade sideways, thus alleviating that overbought condition and not go down. But I'm predicting that it will, because when you take a look at the major components of the trip queues, the first being Apple, we'll go to a weekly chart of it. If you take a look at it, we're stalling out here on Apple. 3 weeks of no new closing high. We had some topping action the week of the 13th, reversal bar the week of the 27th, and last week was a good week, but you did have some topping action. And RSI at current, it was above 90, and we are now down off of that high, but still elevated RSI on a weekly basis of 82.38. So very overbought, and their factories over Foxconn over in China, they're shut down. Yet the stock price is not reflecting it. So we have on a daily chart, we have clear stalling action here. We have RSI, which is diverging heavily. And we had
major divergence.
So I did?
That's a major divergence.
Yeah. So we had a breakout. That breakout on RSI has since failed. So you see Apple, which is the major component of the trip Qs, breaking down. And if you take a look at Microsoft blowout earnings the other day, you cannot argue with the quality of earnings that they had across the board. But taking a look at Microsoft on a weekly basis, again, we're leaning up and into the third standard deviation Bollinger Band. RSI 86.38, daily chart. You're seeing all sorts of topping action. You have a reversal bar off of that third standard deviation Bollinger Band. No shock there. Friday, we did move higher, but we saw topping action. You're seeing selling now into strength. So these are just a few of the indicators that we're looking at when deciding whether or not we want to add to the position, or at some point in time, if things don't go our way, then I'm going to say I'm wrong and move to the sideline and say, okay, lick your wounds. As long as you didn't get too heavy, you're okay. But if we do begin to see breakdowns below key support levels, then we'll be leaning into the short side. Amazon, you take a look at this chart. If I could do away with these last two bars, it said, this is a beautiful chart here. I think that we're going a lot higher. Here's a breakout. Clear. But given the underlying technicals of not just Amazon, but of the entire ETF of the triple Qs, and for the most part, the S&P 500 as a whole, you have year-over-year earnings which are down. So we're leaning into the third standard deviation Bollinger Band, second consecutive week. Daily chart, you're seeing more topping action, reversal bars. It's holding the gap up gains off of earnings, but I think that we're getting tired here. And, if we've come back and we fill this gap on Amazon, in all probability, I'm going to look to cover that short and move to the sideline. Again, I'm not betting on a crash here. I think that the more serious breakdown is going to come when you have a binary event that breaks out, whether it be the coronavirus that is that event. I don't know. I'm not that smart. But I think that it will happen in all probability after the election, because right now you have the Federal Reserve that's in there and they are supporting this market. And it makes it difficult for people to short. And that's why you really need to use the charts to help divine at what best level it is that you want to put on that risk, fight the system, which you technically are. You look at a 100-year chart of the Dow Jones Industrial Average, you have to say you're nuts to short. The chart is clear and defined to the upside. And you've had several crashes between that time. But we're looking to take advantage of this, what I'm perceiving to be basically way too much bullish sentiment. You have the average public investor out there very much bullish, again, involved in the market. They're day trading. They're doing everything that you would expect to see at a market top. And unfortunately, I think that we're seeing the beginning of one right now.
That's fascinating. So let me ask you, what's your trigger? Like, this is the setup, right? And the thesis. What would trigger you to actually, go short?
Yeah. So, I've already begun nibbling on it. So I believe in having some skin in the game. And once I have skin in the game, I become obsessive. So that way I'm watching it. I watch it day and night. So if I saw on Amazon, here's the weekly chart, loving your automated trend lines here, it makes my job so much easier. Were I to see a failure to hold this support level and we broke back down into this trading range, I would be aggressively short in the triple Qs. because that would be a breakout point failure. And history has told us that when we see a major breakout and a subsequent failure to hold that breakout point, meaning this green line here, there's a very strong probability that we will retrace all the way back down to prior support. That could either be at the 1750 mark, or it could be down here at 1719. And history has also shown us that there's a good chance that you break the primary support level, which is down here. So I'm not predicting that we're going to see that yet, but I'm watching for a potential failure to hold the support level, and I will be leaning into the short side very, very aggressively.
And let me ask you one more question. Sorry, I just think your approach is fascinating. Why would you choose the cues instead of like cherry picking the weakest components of the cues?
That's a good question. I like the fact that when I'm shorting in ETF, I don't have to deal with headline risk. I don't have to worry about upgrades. I don't have to worry about earnings reports. None of that stuff. I just clear the decks of a lot of headline risk, and that's a way that I manage my risk. So I'd rather focus on the triple Qs. Now, if Amazon breaks and the triple Qs don't, what I would consider is using put options, possibly open up a put spread on Amazon alone. That way I could finance the short position on Amazon and then have a defined risk. But I usually like to short the indexes as a whole. And I'm liking the setup on the trip Qs because I'm seeing the major components begin to top out here. So that's why I'm going with the triple Qs at current.
Fascinating. What about another side? You were talking about gold miners.
Yeah, the gold miners here. So let's bring up a chart of gold really quick. Go to a monthly chart.
I know a number of people who are along like GDX and various individual miners. It seems to be becoming a popular trade.
Yeah. So here, I want to set this up because there's a lot of chatter out there, folks becoming more and more bearish on the miners of late, and I want to illustrate how I'm viewing this. I'm long of NUGT. I prefer to use the GDX or the GLD for illustrative purposes because they have a longer history than NUGT. And what I'm looking at here now on gold, I'm seeing opportunity where other people are seeing a little bit of concern. We broke out in the month of January. We broke out above this bull flag setup. We also broke above resistance at the 145.20 mark. This month, what we're doing is we're pulling back and we're doing a retest of that support level. I think that's what's setting up here. When am I wrong? This is a question I think that everybody that goes on and talks about their position should say, okay, this is why I'm bullish on it. But they also ought to say, okay, what if you're wrong? When are you out? If I see a failure to hold, just as I illustrated with Amazon a moment ago, if I see a failure of gold to hold this support level here, then I'm wrong on a monthly basis if we close back down into within this trading range, because in all probability, we're going lower. But at current, traders are OCD, obsessive compulsive disorder. I know I have it. I need to see, before I go adding another share of the NUGT, which is the leveraged ETF, putting along with the gold miners, I need to see a retest of the breakout point. I need to see support held, defended, and ideally, we continue to see a breakout on gold. That will be a validation that this breakout is for real. And if we do see a new higher high, whether it be this month, seasonally gold does not do well in the month of February, does well in the month of January. But if we do see a new higher high this month, next month, whatever, then you're going to see a lot of institutional money begin to flow in here. So it doesn't take much institutional money to move the price of gold, and you'll see the gold miners move up as well.
Interesting. That's a good point you make on waiting for a retest or a continuation. I see a lot of traders take the breakout immediately, only to get wicked out and end up top ticking whatever it is that they were trading. And it's at the expense of potentially buying a little bit later and getting a slightly worse entry. I think it's always good advice.
Yeah, I think that, just going back to that chart for a moment, I think that the way I try to illustrate it to members is that if you're going to pay up and you're waiting for the breakout above the highs of January on the GLD, then what you're doing is you're paying a premium for a high quality position, right? So I don't want to hope down here that my Volkswagen, no offense to people that drive Volkswagen, I don't know let's just say it's Saturn, okay? I don't want to hope that the Saturn runs for me. I want to buy a Mercedes on the breakout. I'd rather pay a premium for a high quality vehicle. So that's a poor analogy, but
Sure, GM. Do they even make Saturn anymore?
No, they don't. That's why I chose that. I thought the probabilities of people having a Saturn out there would be pretty low, so I think it's some hate now.
Interesting. Okay.
So I have a couple of stocks that we're watching for next week. If people want to see the types of extreme oversold trades that we like to do, it's pretty much the exact opposite of the Tesla trade. Do we have time for that, Dan, or do you need to?
Absolutely. Yeah, we got plenty of time here.
Okay.
About 10 more minutes, and then we'll.
So a couple of as I mentioned earlier, the Baltic Dry Sea Index is in free fall. And for those not familiar with the Baltic Dry Sea Index, that is the pricing power of dry bulk shippers, their ability to price and move goods from China to the United States, wherever. The pricing power is abysmal. And you're seeing it reflected in the share prices of names like GMLP. They're getting hammered. We have RSI here at current at 15.43. I think it's still going lower. And we'll be looking to buy it at historical support. And what I like to do generally is ignore the daily chart. The daily chart is really, for the most part, a qualifier for me to be even interested in buying the share for what would probably be a short squeeze, because the fundamentals here are horrible. So I don't know where value would be found. I think that you would be relying upon a catalyst being a short covering rally. And to take advantage of that short covering rally, you need to know exactly where you have historical support below. And this is one of the great features. I don't even need to go to a monthly chart. I can just overlay monthly support below. And you can see that there's a good chance that we head all the way down here to $3.45 thereabouts before all is said and done. And I would entertain potentially opening up a trade here at around the 443 mark. But generally, when you have a stock, and this is from the analysis that we've done in the past from these extreme oversold stocks, where you're leveraging RSI, when you have a stock that's in the single digits, and especially below $5 per share, 15.43 on RSI may sound very low and you can't lose. You can. It can go a lot lower. It can go single digits.
Yeah, I've seen that. I've seen RSIs as low as 5 before.
Yeah, and what was it? GLOP? Let's bring that up. LOP. Yeah,
it can always go lower, and it doesn't, like, even if it the RSI stops slowing, it can still be RSI divergent while price goes even further lower.
Absolutely, yeah. All it needs to do is trade sideways. The RSI lifts up higher, and then it resumes its downtrend. So,
yep,
there's a strategy for exiting these positions, and it's kind of long-winded. I won't go into it right now, but in short, if I enter hypothetically tomorrow, here's GLOP, Gas Lock Partners, is another energy play and shipping play, no less. But they're not a dry bulk shipper. They ship natural gas. At current, we have RSI at a 5 handle. We'll probably be long of this early this week, but let's war game it a bit. Again, I like GLOP, but when do I admit I'm wrong here? If in fact we enter the position, and of course we need to know where there's historical support, if there is historical support below, and if we see RSI lift back up above 20, yet we haven't had a rally on the share price, we're out, because our edge over other traders is now gone. the logic, the rationale that we use to enter the trade is gone now. There's no reason to be involved with it. It's a junk stock. The expectation of a short covering rally never occurred. And honestly, it rarely happens, but it does happen from time to time. So this is a high probability trade of profit.
And a way to manage risk because you're already so low. You just set your stop.
Correct.
Lower, essentially.
Yeah, and my son always laughs at this when I talk about this on videos, but it's worth it's worth having a conversation, especially for folks that are new to technical analysis and they're reading books out there that are telling them to buy stock when RSI goes below 30. I mean, folks, there's no quicker way to go broke than using that rule of thumb. I mean, if that rule of thumb would have been employed with this trade here, that would have been first back here. You would have really gotten clubbed. That was sitting with let's say at the lows, if you had gotten in at $16.73. When it did it again back here, you were sitting with a 15 handle. So
there's a lot of false signals in RSI. This actually, it's one of my favorite things about backtesting. Is invalidating a lot of those strategies, right? I almost look at offering a backtesting feature in the platform as a public service, because when you backtest these RSI strategies, pure play, and it's not just RSI, it's really any of them, the MACD cross, pure play MACD crosses, really any simple momentum-driven strategy at all, they all underperform buy and hold, right? They have almost no edge whatsoever. And in many cases, it's like a negative edge. Like you're almost guaranteed losses if you just blindly trade these things that you find on YouTube.
Absolutely, there's no doubt about it. I think that where Team TrendSpider and I meshed is the fact that we have a huge appreciation for multi-time frame analysis. I mean, you built it into your platform here, and wow, this is a game changer. This is they get it. So when you're using the indicators in conjunction with knowing where you have historical support and resistance levels, where you have traders of like mind willing to, in a stock such as GLOP, willing to step in and defend that support level, well, then you're a far more powerful trader. You're not buying blindly simply off of an indicator, which is, again, I would strongly discourage people from doing that. Leverage the tools here at your disposal on TrendSpider and identify where you have historical support and historical resistance. Because
so we have a few questions.
Sure.
Brian asks, do you use any TrendSpider screeners or scanners? And if yes, can you share your parameters? And if not, how do you find tickers by other means?
So I'm just really getting brushed up on using the scanners. You folks are good enough to share with me the scanners that you enjoy. I'll defer to you, Dan, on this because I don't want to bastardize the scanner at current. I'm not educated enough. I use other methods at current, but I'm sure to be adapting very quickly to.
Tell us, how do you find symbols? I mean, it doesn't have to be the TrendSpider scanner, right? There's a million ways to find symbols. What's your favorite technique?
So I use two different ways. One is it's naming one of you. It's a competitor of yours, and I don't want to say it. And they have a screener in there, which is pretty good.
You can say it. It's fine. I mean, this is a brand new feature for us. We just got into scanner games, so I don't expect everybody to be fully versed in it. So, I mean, for the benefit of people listening, feel free.
Okay, it's stopcharts.com. I have a few scans that I've developed in stockcharts.com that identify extreme oversold stocks. It's a simple scan. It's not difficult. I'm sure to be setting up my own here on TrendSpider, no doubt. I also use Thinkorswim. They have it's not necessarily a scanner per se, but they provide me with some stocks that are showing engulfing patterns. Basically setups that would make it interesting for me to see whether or not we have a potential continuation breakout for the following week or a breakdown for the following week. So those are the two primary methods that I use at current.
Okay. Cool. It's always interesting to learn how other traders find stocks. I've been transitioning to the TrendSpider scanner. I've had access to it for longer than most people, but before I used FinViz quite a bit. Right, and I'm still a big fan of FinViz. I think it can be very useful at times. Right, there's a lot of different solutions that do different things, and finding the right ones is part of being a trader. Is figuring out what tools are the best tools for you.
Absolutely. But and the key is to also, as people have a tendency to fear change a little bit, and they get complacent. The tools that you're rolling out here are outstanding, and I keep things fairly basic. We've had conversations where you're into divergences as I am, but I like to keep things fairly basic, using the same tools for the most part. And the automated trend line features here, and the ability to overlay on a weekly chart the monthly support and resistance levels. This is a bad symbol to use. Is just a powerful tool. Because I think that you folks use this. It's like the spell check for technical analysis. Did you guys make that up?
Yeah, I think Jake came up with that.
I love that. As soon as I heard it, I started laughing because I can't give up doing my own trend lines. It's just a habit that I do. However, when I'm done, I do prove what I do, and there are times where, oh, look at that, I missed it, because I check it out on TrendSpider. So kudos to you guys.
Awesome. Well, we're running a little low on time. I can pop in and show the screen around a little bit if anyone wants to see that. I think people were asking about that earlier. Awesome. So Bob, let's try to build a little scan here.
That'd be great.
All right, let me take over the screen share here. How does that work? So we'll try to find some cool stocks, and hopefully everybody can see this. So what I was mentioning earlier when I first pulled this up, right? It's like searching through. Yeah, and Bob, while I get this going, if you can post a link to your next stream.
Yep, absolutely. Yeah,
I'm sure people would want that.
Yep, absolutely. At 7 p.m. tonight, folks, we're going to be doing a live stream. It's usually for members, but you all are invited, of course. And I'll pop a link in there as soon as I can get to it.
Awesome. Actually, funny you mentioned a coronavirus scanner. One feature we plan to add is a Twitter thing, right? So you could, in theory, maybe not. I'm not sure if coronavirus is the right thing, but you could, in theory, set scans, for stocks that are really oversold, that are defense stocks, when Trump tweets the word China or something, which I think would be kind of a cool feature. So here's how this works. We pick a universe. Let's stick with the Russell 2000. That's a lot of different symbols. So that'll give us a chance to search through a lot of different conditions. And we pick the chart type, right? So if you're into range wraps, which are proprietary charts, or Heikin-Ashi, you want to select that here. Otherwise, generic is your standard Japanese candles. And the reason these are separate is because Heikin-Ashi and range wraps calculate the open and close prices differently than a traditional candle, right? And then there's this checkbox current candle. And this is important because this lets you tell the system if it's going to include any open candles that haven't closed yet in the scan, right? So if you're scanning a daily scan intraday and you want to get alerted anything that's forming, for example, a hammer, it may not have closed, but it is currently, if it was closed, it would be considered a hammer on the day. Then you'd want to check that box there, right? So that's an important thing to remember. That lets you scan in force. If it's unchecked, it's the previous candle, that most recent one that closed, that will be the one the scanner looks at for calculations. So and then you define your conditions that you want to look for. Bob, what's a extreme oversold? I think you were mentioning. How oversold?
I usually use it as just for starters 17. And depending on market conditions, if it's a very bearish market, I'll drop that down considerably.
Okay. And do you use like an RSI 10 or is that an RSI 14 you use?
RSI 14.
Okay. So that's basically it. I just created that condition, right? Look for any daily chart where the RSI 14 is less than a constant value of 17, right? When you press scan here, it just goes into the Russell and it pulls up every single chart. Ooh, my good old friend FNKO here. And it just finds any chart with those conditions currently present on it, right? And then you can select the chart, right? And you can full screen it if you want, and you can see, what the RSI is here. We need to be on the daily chart. That's weekly. And you can see the RSI here is 11, right? So it's a quick way to find it. And actually, FNKO is a funny stock to come up here because this is one that I traded not so long ago. And this anchored VWAP, which is a feature in TrendSpider and a few other platforms where you can anchor a volume weighted average price at a point, was my stop, right? When I saw it couldn't overcome this, I got out on this candle right here, the next one down. And it turned out to be a good move because it's smashed down since then. So I really love the anchored VWAP. It was funny that stock came up. Yeah, that was nice. I wish I sold it the day before when it actually got up to it. That would have been better, but it worked out pretty decent regardless. But as you flip through the watch list that generated here, every symbol is going to have that condition met on it. And we pulled up about a dozen symbols here. What's a secondary thing you might look for, Bob, to just narrow it down to just a few?
It's always nice to have. It's rare on so extreme oversold stocks, but you having your Bollinger Band, that third standard deviation Bollinger Band, pierced.
Okay, so do daily price, low, less than, indicator, daily. You said third standard deviation? So that would be, right, we can see if anything matches that. Yeah, no, there's a couple. FNKO is one of them. I think that's probably pretty obvious given what it did. And then there's MTRX, which is another one. So I mean, this is how I actually use the scanner, right? When I'm actually trying to build a watch list, right? I'll start off with a simple condition, right? And if it gives me too many results, I don't want to go through 30 charts. The whole point here is not to have to go through 30 charts, right? So then I'll add like another condition to try to narrow it down a bit and find like 2, 5, good candidates to look at, right? And then I'll throw them into this watch list here called New Ideas. I'm not looking for this type of thing, so none of these are going to be that type of thing, right? And then, watch it from there and maybe set some alerts on it. A few other cool things about the scanner, by the way, is it supports up to 3 time frames in one scan, right? So you can say, I want the daily RSI to be really low, but I want the 1 hour Bollinger Bands to be pierced, right? And you can then scan that way, right? And that might give you a different list of symbols, or maybe none at all. But it's a different way to look at it. And you can use up to 3 separate time frames per scan. Just realize each time frame you add is going to make the scanner a little bit slower because it has to download twice the data as it's searching through those. Kyle, yeah, for that particular scan conditions, that's the type of setup that it would find, right? It actually, it's worth noting that the system comes with a ton of pre-built scans, right? Some of these are very simple, like an RSI breakout scan where RSI was below 50 and now it's broken above 50. And some of these are very complex. There's a whole set in here. I think they're tagged with the word spider. Yeah, spider scans, which are looking for like consolidation on long time periods. For example, this scan is really interesting when you look at it on the weekly time frame. And you got to give it a big list because it's a rare formation. But this will find like almost perfect coiling, right? So stocks that are consolidating in each of the last 3 weeks has traded completely within the range of the previous week. Which is a fairly rare thing, right? And you can see what that looks like here, right? And then if I go down to some lower time frames here, you can see what this looks like. I've actually looked at this chart already. right? But price is getting tighter and tighter and tighter as time progresses. It's going to eventually break out or break down. So you could find something like this very easily with that scan, create a couple alerts on it, a breakdown alert on the bottom, a breakout alert on the top, and kind of go about your life and not worry about it until it picks a direction. And then you can decide if you want to actually trade it or not.
Yeah, Dan, and if I could just pop in there on that topic for a second. The alerts are so critical. I mean, at many times where traders are their own worst enemies, and it goes for professional traders, it goes for the amateur trader. We can overthink trades, but if we have a rules-based approach of if this, then that, if we get a breakout using this chart here above that upper band on a daily basis, and you have your alerts set, there's nothing to do between now and that alert being fired off. And you go to your day job and you focus on that and let the system do the work for you. And that's the beauty of TrendSpider. I have to be honest with you, I use these alerts constantly.
Thank you. I don't know. Like, I've traded since 2008. That's when I was National Semiconductor Company. It was my first trade, right? And I lost money on it, right? And like looking back, I mean, we've only had an alert system for a few years. Looking back, I mean, it has completely changed how I trade. If you look at any of the charts that I watch, right, I've got alerts set on different time periods. I've got alerts set, on key levels. Right, in case something happens. Often I put alerts on these anchored VWAPs. Instead of trend lines, I have this is a trade I'm in right now, and this is my support level, right? And if it doesn't hold this, then I probably want to get the heck out of this. So I've just created an alert on it, and that saves me from having to have like 50 different charts open on my screen. And I think that's a misnomer that a lot of new traders have, right? It's like you're only a cool trader, you're only successful if you have 40 monitors on your desk and they each have 20 different charts on them, right? And like, how do you even pay attention to that?
I think that that's also a bunch of props for the folks on YouTube that I think minimalism is far more efficient because if you have all those screens open, you have a lot of data coming in, and people aren't built for multitasking. It's not the way we're wired. And so if we're provided with actionable data that we've already analyzed with emotion not being involved, you become a far more powerful trader.
Agreed. Randall, to answer your question, pre-built scans can scan anything you want, right? So I selected the Russell, but you can actually tell it where to look for. I like to use the analogy of it's like, you tell it what haystack to look for, a specific needle in. So you can scan through your own watch list. You can scan through one of the pre-made watch lists. There's a dozen of them. Actually, there's way more than a dozen of them, but there's a lot of them, right? They go by industry. They go by index. So you can scan the NASDAQ Biotech Index or the Russell 2000 or your own list of symbols. And actually, letting a little cat out of the hat, starting sometime this week, hopefully you'll be able to scan through crypto as well. We're slowly adding crypto, and then after crypto, Forex to the scanner. But it's like Google for charts, right? You can find things that are really interesting, and then you can create alerts on them so that when they become, when the setup has played out, when it's starting to move in your direction, then and then you can jump in instead of trying to chase it early and getting washed out potentially. And the other cool thing about scanning is it works with back testing. So like if you're thinking about trading like one of those RSI or MACD strategies you see on YouTube, right? Find a cool list of stocks based on that strategy, run the back tester on them, right? And see exactly how good that strategy is. And my guess is probably not that good, right? I mean, the best traders I know, they don't trade that way. They're like Bob, where they've spent years developing, a system that works for them, and they've figured it out and they've played with it and they've, experienced it to develop it, and they've back tested to kind of refine it, and they've put thought into it, and then they stick to their system, right? They set their stops and they stick to them. So let's see what other questions. Kyle, you can absolutely create alerts on RSI if you want to. TrendSpider works, Stephanie, on ETFs. We have futures, but futures data is end of day, so it's not real time data. But you can still back test on it. You can still chart it. You can still do all kinds of stuff with it. And Eric, it's 100% browser based, right? So it runs in a web browser. So we're getting up to time here. We've got just a few more minutes. If anyone has any final questions for me or Bob, now's your chance. Stephanie asks, can you show what's green after the scan is complete, and can I change the columns in the results? So you cannot change the columns yet, and you can't use fundamental data in scans yet either. Both of those things are coming very soon to the scanner. We actually have already purchased the fundamental data. We just have to integrate it into the interface and give you a way to access it, and then giving you the ability to control the columns as part of that project, because we understand people are going to want that. There are no options data feeds in the system right now, but the fundamental feed will include whether or not something's optionable. So you'll be able to restrict your scans only to optionable securities.
That's great.
Yep, that's been a very common request. It'll also give you you'll be able to say search for these technical conditions, but only in stocks with a growing EPS. Right, and we believe we'll also be able to get analysts price targets in there too. So like how FinViz has only stocks that are 30% the price target or whatever. We're trying to pull in fundamentals as much as we can where it makes sense. So it'll be part of the scanner, and then we'll also kind of like how some other charting tools have. There'll be an optional side panel you can have open that'll have the fundamental profile of the company and its financials and stuff like that. There will be a way to mark earnings on the chart, so when upcoming earnings are. We're going to address all of that little stuff as part of that big project. Let's see. Matt asks, can you scan or backtest an indicator crossing above RSI? Yes. Actually, no. I'm sorry. You can't. You can't add an indicator on top of an indicator yet. So you couldn't add a moving average to RSI. But if an indicator has two lines in it already, like a stochastic RSI does, or Lane's stochastic, right? There's various types of RSI that do have a moving average as part of it. You could absolutely use those in that way.
Great stuff.
Awesome. Well, so that's basically it. If there's no more questions, we appreciate everyone being here. I guess more questions. So Nav, futures real time. Thank you for asking. That's a big question. It's a big problem for us. We plan to offer a way for you to pull in broker futures data this year, hopefully before summer. And that'll work with a partner broker. So you'll need an account with them. It's like a micro future broker, so the deposit's $200. You don't actually have to trade in there if you don't want to. But by doing that, you'll be able to connect your broker account to TrendSpider and pull in futures data. That's the only way to really do it that makes any sense. In order to do the commercial data feeds that we use for equities, it will, the futures exchange want you all to pay them $120 per exchange a month, which, we don't think is fair. I mean, we're already paying for TrendSpider. You should be able to use whatever data you have. So we'll give you the way to pull a broker data in, and hopefully this year in the first half. Fib extensions, Dennis, you actually have them, but you can double click on the fibs and reverse them, and that'll turn a retracement into an extension. 3-point extensions will be coming in the what month is it? It's February, so hopefully in March. Stephanie, we're not sure who the futures brokers will be yet. We're still working on that, but we'll release a list as soon as we know. Okay. Well, Bob, thank you very much for being here with us. It's always a pleasure talking to you, man. I love your style.
I think this is my 4th time, and I enjoy it every single time, Dan. So thanks for having me back. And for everybody out there, I'm a true believer in TrendSpider, so much so that I integrated it into my membership levels. So if you're interested in my company, my advice, then please just stop on over and you can get TrendSpider with your silver and gold level memberships. I've also just dropped in that link if you want to join me at 7 p.m. Eastern Standard Time tonight. I'd love to have you. I'll drop it in there again just in case, because we have a lot of questions come through. And thanks for having me, Dan.
Absolutely, and that's worth repeating. Bob's a certified partner of TrendSpider. That means he's been trained in how to use it. He knows how to use it really well, and he's authorized to offer it. So anyone who subscribes with him can get a special TrendSpider plan that is just for Bob's members as part of that. So again, thank you everybody for being here. We really appreciate it. It's right on the hour, so we're gonna call it a wrap here. If you are interested in the replay, just check your email in about a half hour. You'll get it automatically. And again, thank you again for everyone being here. It's always a lot of fun. Have a great night and good luck this week trading. Take care, Bob. Thank you again.
Everybody have a great night.
Bye, everyone.
Hey, before you go, make sure you head on over to trendspider.10minutestocktrader.com to get your discounts. And I'm even going to throw in some extra bonuses worth over $100 to incentivize you to take your free trial of TrendSpider today. And the only place to get these discounts and free bonuses is at trendspider.10minutestocktrader.com. 10minutestocktrader.com content is for information and educational purposes only. It is not, nor is it intended to be, trading or investment advice or recommendation that any security, futures contract, options contract, transaction, or other financial instrument or strategy is suitable for any person. Trading securities can involve high risk and the potential for total loss of any funds invested. 10minutestocktrader.com and Christopher Uhl, through its content, financial programming, or otherwise, does not provide investment or financial advice or make investment recommendations. Investment information provided may not be suitable for all investors and is provided without respect to the individual investors and audience's financial sophistication, financial situation, investing time horizon, or risk tolerance. 10minutestocktrader.com and Christopher Uhl are not in the business of trading securities trades, nor does it direct client commodity accounts or give commodity trading advice tailored to any particular client situation or investment objectives. 10minutestocktrader.com and Christopher Uhl are not licensed financial advisors, registered investment advisors, or registered broker-dealers. Stocks, options, futures options, and other financial instruments not included here involve risk and are not suitable for all investors. You alone are responsible for making your investment and financial trading decisions, and for evaluating the merits and risks associated with the use of any financial security and broker platform. For more information, please visit 10minutestocktrader.com/legal. And thanks for stopping by.